This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil futures climbed on Monday after Saudi Arabia hiked June crude prices for most regions and as the prospect of a Gaza ceasefire deal appeared slim, renewing fears the Israel-Hamas conflict could still widen in the key oil-producing region. Brent crude futures gained 51 cents, or 0.6%, to $83.47 a barrel at 0636 GMT, while U.S. West Texas Intermediate crude futures were at $78.64 a barrel, up 53 cents, or 0.7%. Last week, both futures contracts posted their steepest weekly loss in 3 months, with Brent falling more than 7% and WTI down 6.8%, as investors weighed weak U.S. jobs data and the possible timing of a Federal Reserve interest rate cut.
As Big Oil returns this week to the industry's annual showcase for offshore energy projects and equipment in Houston, deepwater discoveries off Guyana, Namibia and the U.S. Gulf Coast will take the spotlight. Offshore exploration had dimmed after the U.S. shale boom ushered in new and cheaper-to-tap supplies of oil, and as past offshore cost overruns pushed deepwater projects onto the industry's back burner. Newer deepwater projects have the attributes oil and gas companies are looking for: longer-term production, lower break-even costs, big resource potentials and lower carbon emissions, said Pablo Medina, head of new ventures at energy consultants Welligence.
Moving on to the top news in the energy sector.
Global petrol demand growth could halve in 2024, squeezing second-half refinery margins, analysts said, driven by a shift to electric cars in China and the United States and a return to normal consumption after last year's bounce following COVID-19. In the lowest growth since 2020, demand is likely to rise 340,000 barrels per day, BPD, to stand at 26.5 million barrels of oil per day this year, says consultancy Wood Mackenzie, down from growth of 700,000 barrels of oil per day last year, as China nears the point of peak transport fuel demand and the US has surpassed it. Penetration of electric vehicles has been increasing in US and China, said Woodmac analyst Sushant Gupta. For this year, Chinese demand will grow by only 10,000 barrels of oil per day, due to higher EV uptake.
Recent Russian massive drone and missile attacks on Ukrainian energy system have caused more than $1 billion worth of damage to the sector, Ukraine's energy minister German Galushenko said on Sunday. Since March 22, the Russian forces have been attacking Ukrainian thermal and hydropower stations as well as main networks on an almost daily basis, leading to blackouts in many regions. Today, we are talking about the amounts of losses for more than $1 billion. But the attacks continue, and it is obvious that the losses will grow, Galushenko said in a statement. Next, we have the top news in metal markets. Shanghai copper prices fell on Monday, tracking losses in London, amid a firmer dollar and a lack of clear demand improvement from the troubled Chinese property market. The most traded June copper contract on the Shanghai Futures Exchange closed down 0.6% to 81,300 yuan, $11,268.35 per metric ton, tracking an aggregated 0.8% decline on the London Metal Exchange. Chinese markets were closed for a holiday last week. The London Metal Exchange is closed for a public holiday on Monday.
Gold prices firmed on Monday, as expectations that the U.S. Federal Reserve would start cutting interest rates later in the year and tensions in the Middle East lifted bullion's appeal. Spot gold rose 0.6% to $2,314.31 per ounce by 0636 GMT. U.S. gold futures was up 0.6% to $2,322.20. Investors will look at the political situation in the Middle East and how the ongoing negotiations for a ceasefire play out. If the hopes of a truce become lesser, gold will gain, said Kelvin Wong, a senior market analyst for Asia Pacific at Oanda.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures rose marginally on Monday, tracking gain in rival soy oil prices, while concerns around key producer Malaysia's exports weighed. The benchmark palm oil contract for July delivery on the Bursa Malaysia Derivatives Exchange rose 3 ringgit, or 0.08%, to 3,847 ringgit, $811.77, a metric ton by the midday break. Dalian's most active soy oil contract rose 0.81%, while its palm oil contract dipped 0.05%. Soy oil prices on the Chicago Board of Trade climbed 0.65%. The outlook for the soybean harvest in Rio Grande do Sul has deteriorated swiftly after torrential rain flooded fields. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.